Welcome. Welcome to the National Workshop of VIRTEU Research Project focusing on the United Kingdom. I'm Dr. Costantino Grasso. I serve as Associate Professor in Business Law at Manchester Law School and as the Principal Investigator of this research project. I would like to thank you for getting involved in this event, which is particularly important in the context of the research project. VIRTEU is a multidisciplinary international research financed by the European Commission. It aims at exploring the interconnections between tax crimes and corruption with the intent to reveal the in-depth relations between fraudulent and corrupt practices in the area of taxation. In order to achieve the research objectives, at VIRTEU we are conducting a series of activities such as background research, which was carried out and analyzed by the research team, interactions with high-level experts, including both our national leading expert and research associates, as well as a series of roundtables, seminars, symposium, and other academic events aimed at discussing the most burning issues that have emerged as a result of our research activities. Finally, we are organizing a series of national workshops, just like the one we are about to begin today, which are aimed at obtaining essential feedback on the research outcomes. We are also preparing an online questionnaire aimed at professional experts in the subject matter, which we will send to you at some point over the course of next weeks. We will be really grateful if you can take the time to answer it. Today's workshop serves a great purpose to the research project framework. Through a series of questions, the members of the national expert panel will be called upon to provide critical evaluations based on their professional experience about the relation between tax crimes and corruption. The discussion will aim at shedding light on systemic weaknesses within the context of contrasting such criminal phenomena from a legal and practical perspective. Given the lack of time and how important it is to cover all research objectives and also to avoid running over time, I would like to ask that everyone make an effort to limit their answer time to 1 or 2 minutes tops. On that note, I would like to specify that it won't be necessary to offer the description of the regulatory framework. The work of our national leading expert for the United Kingdom, Dr. Branislav Hock, who is the senior lecturer in economic crime at the University of Portsmouth, already fills in those gaps. If necessary, you may reference the relevant piece of regulation, and you can always send us the related supporting material, which we will review in the context of the research. For that very reason, I would like to ask that you provide precise and concise answers in order to offer the necessary critical analysis to tackle and identify the specific issues addressed in the questions. During the actual debate, it won't be necessary for all experts to contribute to each and every question. Please feel free to intervene where you believe it's important to share your knowledge and professional experience. The discussion will be divided in 2 parts, lasting roughly 1 hour and a half each. The first part, the first 6 questions, will be moderated by the project's co-investigator, Dr. Lorenzo Pasculli, who serves as Associate Head for Research at Coventry Law School. Then, after a short break, I will take on the second part of the discussion from question number 7 to question number 12. Now, I would like to introduce our panel of terrific national experts in alphabetic order, and I would like to thank them again for joining us today. So we have Lloydette Bai-Marrow, founding partner at Parametric Global Consulting, former principal investigative lawyer at the Series of Fraud Office. Mike Betts, head of learning and counterfeit studies at CIFAS. Rachel Cook, senior associate at Peters & Peters. Deeprit Danoa, barrister at the Field Court Tax Chambers. Adam Luck, freelance investigative journalist, and Osita Mba, solicitor in England and Wales, a chartered tax advisor and former lawyer for Ex Majesty Revenue and Customs. In order to make the experience even more valuable, we have invited another panel, which is the panel of the experts that cooperate in various ways with the research project that will interact with the national experts for the mere purpose of stimulating and supplementing the discussion. I shall go ahead and introduce now this second panel of fantastic project experts, again in alphabetical order. John Christensen, founder and chair of the board of Tax Justice Network. Branislav Hock, senior lecturer in economic crime at the University of Portsmouth. Mary Inman, lawyer and partner at Costantino London office. Stuart McLennan, associate professor in tax law at Coventry University. Michael Ronica, lawyer and partner at Costantino Washington office. Donato Vozza, pro-tax research associate at Coventry University. The project experts Unlike the members of the national expert panel, who won't actively participate in the discussion, but they will get involved by asking national experts some additional questions when needed or integrating the discussion where a gap has been identified. This way, we will be able to enrich the discussion whilst abiding by the time restriction we have set ourselves. Basically, after the analysis of each main topic, the moderator will ask the project experts if they wish to intervene in order to stimulate further discussion or clarify key points. I would also like to thank Engin Erken and Stephen Holden, who serve as research assistants within the project VIRTEU and are currently PhD candidates at Coventry University and Manchester Metropolitan University. Finally, I would like to give a special thank you and most sincere thank you to Mary Inman and John Christensen for the crucial support in organizing this event. A final note on the GDPR, I would like to thank all of you who already provided us with the signed film and photography consent form. If you are not, please send us the form at your earliest convenience. This will be really appreciated. Anyway, your participation in today's session entails your implicit consent to the publication of recordings, as well as extracts of them on websites, online platforms, and social networks used by the research project or by third parties with whom we have established a partnership. I will now give the floor to Dr. Pasculli to begin the debate. Thank you very much.
Thank you, Costa. Thank you, everybody. I would like to spend a few words to greet you, but there is no time, so I need to crack on. The program is very full, as you will see. So how does it work? We have several big questions that are structured in many sub-questions. So what I will do, I will explain generally the main question and then lead you through the single individual questions. Please keep it really short. And if you don't feel like answering, don't feel pressure to do so. As Costa said, these are questions for everybody and also for nobody. If you don't feel you're aware of the problem or you don't know what to answer, just leave it. So the first question explores the phenomenon of tax crimes in your jurisdiction, so in the UK. What we want to understand is what behaviors are criminalized, but also what are the most common behaviors. So starting from the first point, what behaviors and practices does the law criminalize as tax offences in the UK?
So I'm happy to answer this one, but I appreciate that there are many experts who will know far better than me. So just to kick things off, but in the UK, as you all know, we distinguish very clearly between avoidance and evasion, but over the years, and particularly recently in some of the Supreme Court decisions that have been handed down, that line is blurring a little bit, but certainly things like non-reporting of taxable trading income, missing trader fraud, that's a really big VAT fraud that will be reprimanded under the law. Tax allowable expenditure claim, false invoices, imported goods. A case I currently have on actually deals with imported goods and failing to provide proper invoicing, cash or cryptocurrency transactions, false identity and tax avoidance schemes that haven't been DOTAS approved. I think it's a sort of really quick pit stop summary.
That's excellent. Thank you, Dilbret.
Okay, can I come in?
Sorry, I was just going to add that while there hasn't been any prosecutions for this, we have had quite a few people, corporates, coming to us for advice about the new corporate criminal offence under the Criminal Finance Act 2017, the failure to prevent tax evasion as well. That's on our radar quite a lot at the moment.
Thank you, Rachel. Rosita.
Yes, and thank you very much. Can I expand this a little bit? So, the way I look at it is that if you're looking at behavior, you start with legal concepts. So in fraud, there are three main behaviors that constitute fraud in general law and in tax law. The general law in the UK is the Fraud Act 2006. The general tax law is the common law offense of cheating. So the first behavior is concealment. The second is misrepresentation. And the third is abuse of position. So that's sections 3, 2, and 4 of the Fraud Act. There are case law on the same in relation to the common offense of cheating. So when we say concealment, think of tax evasion. This is where a tax payer fails to declare tax liability. So that in law, the legal concept for that is concealment. It is fraudulent because it was dishonest. Now, the controversial aspect is tax avoidance. The way to look at tax avoidance is in terms of misrepresentation. The taxpayer is not concealing tax liability, it's declaring taxable income. They start claiming that because he had participated in a tax scheme, that liability, that taxable income or capital has been wiped up. So that is fraudulent misrepresentation. I'll expand on this as we go on. And then the third one then is fraud by abuse of position. Now, this is what we call tax corruption. The terminology in common language in the UK is sweetheart tax deal. This is where tax official lets a taxpayer to pay less than they ought to pay in law. Now, there is a case law going back to the 18th century in the UK where a tax official was convicted of cheating the revenue by allowing a taxpayer. Now, the key thing about this case is that the tax official did not benefit personally because the test is the loss to the revenue. There was loss and it was deliberate, so it was cheating. Now, the Fraud Act has now codified this both in terms of tax and elsewhere. So if you look at Section 4 of the Fraud Act, it talks about loss to the person. It doesn't require the fraudster or the offender to gain personally. So,
sorry, Osita, thank you for this, but I need a clarification here because you mentioned the Fraud Act, but the question is, do you think there are behaviors related to tax that can fall within the Fraud Act, or do you think they would fall better within special offences that are criminalised as tax offences?
Yeah, so there are specific offences in statutes, but the main one is the common law offence of cheating, and the main test there is dishonesty. So in that regard, it's exactly the same as the Fraud Act. The test is the same, dishonesty, and the three specific behaviour, as I say, is concealment.
Thank you. Yeah, that was clear. Thank you. Thank you very much. Okay, moving on, unless someone else has anything to add. The next question, I think Dilpreet addressed it partially, but we're already there, is what are the tax crimes that are most frequently perpetrated in the UK, if you know? We don't require statistics here. We're not asking you to provide data.
I think it's sort of almost what's the flavour of the day and what's HMRC very keen to prosecute usually, or is start deep investigations into. So a few years ago, you'll recall with the UBS and Deutsche Bank case, there was a lot of investigation into how banks rewarded their employees in terms of their bonus schemes, and schemes that had previously been approved by HMRC were then considered to be what Lord Reed described as the Houdini taxpayer. Currently, it's how traders are declaring their income. MTIC fraud about 8 to 10 years ago was a really, really big, it sort of raised a number of big investigations. So I think, and my colleagues on this call no doubt will correct me on this, but I think it's what the flavour of the day is. And Rachel raised a really good point actually about the CCO legislation. I mean, that came in a few years ago, but it's only recently that I've sort of heard rumblings sort of from HMRC about, well, actually, this is a statute which we could use potentially. And I think that's one of the worrying things, is that this legislation comes in, taxpayers don't often know. And it's really, what is HMRC's focus? And that's where.
Excellent, very helpful, thank you.
Yeah, I think actually touches on a really interesting area actually, mentioning HMRC. I mean, my previous experience was with the City of London Police and around fraud training in particular. And it's quite interesting actually when, first of all, talking about the legislation. I mean, the legislation taught to police is around the Fraud Act particularly. And I think this sort of question drives to the landscape that actually tax crime is seen to be very specialist. and it's not part of the general sort of law enforcement activity, as in the police force, the police service. So it's quite interesting that it's sort of very specialised, yet actually probably the informal economy and cheating the public revenue is incredibly widespread. And I think the issue is we have no sense of how widespread it is probably in the United Kingdom. Probably a little bit like fraud. We know fraud offending from the Office of National Statistics is probably, maybe 3.8 million offences, and yet only a small percentage of that will be reported through to the authorities, maybe 700,000 or so. And from that, only a small amount actually get prosecuted. So in a way, we really don't get the visibility of the scale of tax fraud offending. One of the other bits of legislation that we may have talked about was misconduct in a public office for people who are facilitating this type of criminality. So maybe we could add that to the list from the previous question, I think. But it is having a sense for the scale is really difficult, because it is seen to be, quite corporate, and actually is a matter dealt with at a corporate level, and particularly, by that sector of legal companies who will be talking to companies about their probably obligations and liabilities under the Criminal Finance Act 2017. So actually it's very difficult to assess the level, except we probably all know it's probably quite extensive, but difficult to measure.
Thank you, Mike.
Yeah.
Very, very helpful. Rachel, were you about to say something?
Yeah, it's really sort of already been said in a way. I was just going to say that in terms of what's prosecuted and what's perpetrated, there might be a difference in those two things. And I was also going to say, in terms of, if you prosecute 10 relatively sort of self-employed hairdressers, the amount of that would be quite low. Whereas if you do one prosecution for a big corporate one, that could be worth millions. And so again, sort of the value of the tax that's lost sometimes can be a bit distorted by the prosecutions that are brought.
Yes, this actually brings me to another question, which...
Can I add something to that?
Lloydette, yes, please.
I think the point that Rachel makes is a really valuable one about quantum, because what we've seen over the last, I think specifically over the COVID period, I think we have seen a pivot by HMRC really to much more of a focus on corporate prosecutions. We've seen them really invest in a great deal of resources in terms of investigators into their corporate criminal offence team. We've seen them spend quite a lot of money on this area. So for me, I see that as that's where they're pivoting to. And that's where, the biggest rewards possibly are to be obtained. And whilst they want to continue to work and sensitize the public in relation to tax evasion, the focus appears to be shifting to really going after the bigger fish in the pond, really.
Fantastic. Thank you very much. I would just ask you to stick to the question, because we do have all these questions sorted. So the question of the amount I was actually about to ask now is, what are the most relevant offences in terms of the amount of money evaded? So what are the tax evasion schemes that are used to evade the most money? In your experience, all the questions are based on your experience. We're not asking statistical data.
So we've currently got one on in chambers, which I can talk about because you'll have seen the judgment. But in respect of the Danish Revenue Authority looking to try and prosecute a series of defenders in relation to the cum-ex scandals, that has been pretty prevalent for the last 2 years. I remember the first time I wrote about it when it was sort of hitting headlines in Germany, but that sort of managed to travel its way across Europe, and a number of these defendants are now sitting across the world, from the Middle East all the way to the US. The other really big one in my experience was MTIC fraud that generated a lot of work for a number of people, and cross-border effectively tax evasion. And I think the revenue rule makes that a really challenging one. But as Lloydette and Rachel mentioned, it's the big ticket money, because these are the chaps with the assets, with the money that ultimately HMRC say, well, we can put all our money into, the hairdresser that hasn't properly declared their income, and there are 20 of those. Or we can put all our resources after this one person. and see if we can work with foreign revenue authorities to see if there are multilateral instruments or other treaties that are going to allow us to try and recoup underdeclared tax in some way or form.
Yes, thank you, Dilpreet. Since you mentioned the transnational aspect of certain frauds, I have a twofold question, which is, in your experience or from what you know, what are the transnational tax crimes or tax crime schemes that are involving most frequently the UK, and what are the countries involved in these schemes?
I think in this regard, can I take this one? Can I start with this one? So I would say offshore tax evasion, because in the UK, we have a very big financial services industry. Allied to this, you have a very big wealth management or private banking industry. And what they do is to help wealthy individuals to conceal tax liability offshore. And the go-to jurisdiction in that case is Switzerland, because under Article 47 of the federal banks and savings banks of Switzerland, it's a crime to disclose banking information, even to Swiss and foreign authorities. So this is the basis of the offshore tax evasion industry. So in the UK, where most of the banks, where most of the tax will go will be Switzerland.
I think you froze, Osita, but I think I understand where you were going, Switzerland and of course other offshore jurisdictions. Any other ideas about this? No? Good. So project experts, this round of questions is now done. If you have any further questions for clarifications, addition, and so on and so forth, please go ahead. Otherwise, I will move to the second question.
Yeah, if I may ask, thank you so much for your answers. So the report, as I'm working on it, is mostly focused on value-added tax, on indirect taxes. My feeling is that you're in that discussion largely focus on direct taxes, which are a bit more sexy, let's say, in some respect. So if you could maybe a little bit clarify or specify further your experience related to value-added tax fraud. So it's the first. And the second point I became a little bit confused in some of these answers when there was reference to the Fraud Act. So I would like to, if you could clarify to me, whether it's used in practice in prosecuting and dealing with actual tax schemes, or whether it's more specific laws and regulations, the common law offense, cheating of public revenue, and the specific value-added tax 1994 Act, whether they are actually used more. Thank you.
Thank you, Bran. Excellent questions. Anyone wants to try and answer? The first one is your experience with VAT fraud in particular, and the other one is a bit more detail on the different usage in court of different criminalizing provisions or common law.
Just to say that in terms of indirect taxes, then VAT fraud, I find in my experience, there is an area of investigation and prosecution by HMRC, and as Dilpreet said, of course, MTIC fraud was very big not that long ago, although you don't see it so often now. Also, on the second question, in my experience, I've tried to think of an example of when I've seen the Fraud Act used in a kind of criminal investigation, prosecution. And in my experience, it's not something that HMRC tend to use.
I would agree with Rachel, and I think that's partly because our tax legislation is now so extensive, first of all. Secondly, HMRC now have these very deep and almost akin to police investigatory powers called COP9 procedures that I'm sure people are familiar with on this call, but that gives HMRC the investigation rights. That means that they don't really look into the Fraud Act. I've not seen cases certainly brought under the Fraud Act. It would make sense from a jurisprudential perspective, but because our legislation has become so extensive and the anti-avoidance provisions are so deep, and the powers now given to HMRC are so wide, that these follower notice, accelerated payment notices, and the COP9 procedures in particular, which relate to more criminal-like offences, give HMRC those powers that they don't need to look to other legislation, I think.
I think also actually from a sort of training perspective, what is interesting here is in law enforcement training, in police training, particularly for fraud investigators, having been involved in developing the curriculum for that historically, there is very little on tax crime. So actually the legislation that may be used, like cheating the public revenue and the like, actually isn't in the curriculum. And I think working on the counter fraud professionalisation project for government, interestingly, the regime for HMRC also has its own sort of areas of legislation that it will train. And I think until quite recently, there wasn't really a crossover between looking at the different powers. So I think the Fraud Act particularly is used extensively in policing. And as we're sort of describing here, probably not in HMRC particularly. And whereas the tax powers are used by HMRC and trained within HMRC, perhaps the Fraud Act doesn't have the same prominency as their own sort of legislation. That's all being addressed by the standardisation project. So with this professionalisation, there's a new set of training curriculum, and all sectors will be trained to that. So we may see moving forward a wider use of powers in different sectors. So I think that's interesting from a training perspective, that we're seeing perhaps why they're sticking to their own powers that they're familiar with and the powers that they're trained to use. But obviously the Fraud Act has and potentially has a very wide use, I think. But just an interesting observation, really.
Thank you, Mike. That's very helpful as well. So moving on, question number 2 is about the complexity of the legal system as such. We see that later, but also the adequacy of legal definition, so to say. So the first sub-question is, how would you assess the overall complexity of the tax system in general in the UK? The question aims at discovering whether and how such complexity can actually facilitate tax crimes or hamper or hinder tax evasion, anti-tax evasion strategies. So complexity, and whether this complexity actually facilitates criminals.
Hello, sorry, I lost you.
Rosita, we lost you too, but glad to see you back here. Do you want to answer?
Well, I'll probably let people who have been on to start this one, and then I'll come in at the end.
Okay.
In my experience, sorry, do.
Go ahead, Rachel.
I was just going to say, obviously there's lots of statutes, there's lots of common law, there is lots of legislation. So it's complex to that extent. I would think that the average person who was in business or about to do some tax would be able to relatively easily work out whether or not there might be an issue. But I think that the difference between tax evasion and tax avoidance has sometimes become a bit blurred. So I'm thinking about, for example, people who are self-employed and were given advice from accountants about how to set up companies and so forth. And in fact, now, I don't think they've been criminally prosecuted. Quite a few of them have had to pay back large amounts of money, and to their mind, it's very unfair. They relied on professional advice. So I think it can be complex from that point of view as well. Where is the line between evasion and avoidance? And some people would say as well that kind of line of dishonesty, it becomes a little bit difficult as well.
Thank you. Dilpreet?
I think Rachel covered most of the points I was going to say, so I won't make this very long, other than to say I think I completely agree. I think it is an increasingly complex system. The rules change, as we know, every year. And the other point is that tax systems, the optimum tax systems, should be designed in a way that makes them, simple, they're adequate, they're effective. That's not what our current system is. And there's a real tussle between how do we get it simple enough such that the end user isn't making, you know, the inadvertently innocent mistake, versus the person who is so well versed and knows where the little loopholes and the lacuna in the law lies, that actually they are using that complexity to their advantage.
Yeah. And I was just going to add to that you know, when we examine this question about complexity, we also need to talk about how historically the UK tax law has been framed from the outset. And we've seen, you know, a real approach to sort of responding to targeted issues. So, for example, they'll identify a tax avoidance scheme or tax evasion scheme and close that and legislate against that, and another one and legislate against that, and really focusing on these specific issues rather than taking a much more broader approach to the entire tax law framework or landscape. We've now seen that HMRC recognises that there are these innate complexities that make it difficult, definitely, as you said, about the end user being able to grapple with what exactly are the liabilities that they are responsible for, and really trying to focus now on how do we do this in a way that targets, you know, mass marketed tax avoidance schemes, mass marketed tax evasion schemes. And that's how, you know, the disclosure tax avoidance scheme has come about, and a number of other different responses to that, which I think you've already touched on. They've all been a response to trying to make the system work a bit more smoothly and trying to not just fill holes, but trying to look at it from a much more holistic, broader approach. So it is complex, and we all accept that, but it's very difficult to see how we unpack that. You know, we've literally just got to build on what we have. And I think some of the things that have been done, you know, the JOTA scheme and others, are good steps in the right direction. I'm not sure about the retrospective application of some of those things, but I think they're positive steps in the right direction.
Can I say, very interesting. Osita.
Thank you very much. I think we have to also look at the reason for the complexity in the first place, because I think the main reason is the substitution, the use of the civil law that is meant to deal with lawful behavior, to deal with crime. So HMRC's approach is to prioritize revenue collection over criminal enforcement. So if you have something that will be a crime in criminal law, for example, where people have bought a scheme and they've claimed release that they're clearly not entitled to, where the issue would be dishonesty if it was in a criminal court. But because HMRC's approach is to apply the civil law, so rather than doing anything about it, enablers in the criminal law, they wait for the taxpayer to submit their return, and then they will say, oh, let's allow the relief, and the taxpayer will appeal in the civil court. Now, the issue then is no longer dishonesty. It becomes a matter of interpretation. For example, most of the schemes, for example, use losses. You know, they create artificial losses. But there are provisions in law where parliament say if you make a loss in a trade, you can use the loss to deduct to reduce your taxable income. Of course, if you make a real loss, you wouldn't buy a scheme. So the reason people will buy schemes because they have made a loss, but they've bought a scheme and they've claimed the loss. Now, if it was a criminal matter, the issue would be dishonesty or not. But in the civil court, the question the court will be asked is, when Parliament enacted that law, did they say that if your loss arose from a scheme that you're excluded? And over the years, the approach the courts have taken is that anything that is not explicitly excluded is allowed. So you have a case where people who have made any real laws, they've bought a scheme, and the courts will say that their scheme worked. And then the challenge now will be for the revenue to now ask Parliament to specifically outlaw every scheme, which is impossible. So this is why we have specific or targeted anti-avoidance legislation. They try to anticipate schemes, which in itself
Thank you
goes.
That's a very, very, very interesting point. Yeah, makes sense. This kind of flows very naturally into the next question, which is not anymore about the complexity of the tax system as such, but rather the complexity of the criminal law surrounding tax crimes. And by complexity, I mean formal issues, so overlapping between different instruments, overlapping between different definitions, and so on and so forth, but also structural and substantial issues surrounding the criminal law. Do you think the criminal law of tax crimes in the UK is too complex, and do you think this complexity can affect investigations and prosecution, or do you think it's quite solid and clear?
I think it's clear. I mean, if I start from where I started before, the criminal law itself boils down to dishonesty, and juries are very adept at identifying dishonesty. The problem is that HMRC's approach is to use civil procedure, settlement, civil litigation. So it's that interaction between the criminal law and the civil law that creates complexity. The criminal law on its own, like I said, the common law offense of cheating is very wide, and it's about exactly the same as fraud act, dishonesty, which is a matter for juries to decide. And it's based on what you've done, not what the statutes might have intended.
Thank you. So you say the law is fine, the problem is HMRC approach, they only use civil regulation. Other voices on this point?
Yeah, I think probably from more of a training and learning perspective, I think the legislation's pretty good actually. You know, the Fraud Act is a really effective bit of legislation. It's written in an accessible way. The points to prove are very easily identifiable. Cheating the public revenue and the common law, again, you know, it's quite well defined really under different case law. So I don't think the problem lies necessarily with the legislation. I think the Criminal Finances Act, you know, preventing the tax criminality is also a very good bit of legislation. I think the problem lies elsewhere. I mean, certainly from previous experience from a policing perspective, not HMRC, it's generally the difficulty of persuading juries that tax actually is a crime. You know, the one key example really, the famed example is probably the Harry Redknapp case a few years ago, and you know, clearly found not guilty. But yeah, the problems lie elsewhere. So legislation, I think, it's reasonable, it's effective. The problems are elsewhere within the whole dynamic of actually is tax crime a crime? That's the whole problem. You know, we know it is.
Very
actually,
important. Yeah.
Yeah. This is where the problem's going to lie. So I think.
I think that's a really good point, Mike. And I think part of it is the very strict division that we have in this country between the civil and the criminal jurisdictions that I think most people who say don't have to deal with the courts day in, day out, the ordinary citizen just, you know, will assume, of course, you can go to one, and if it's a tax crime, you'll deal with it in a court. But we're pretty prescriptive about it, and so tax crime is not really a crime to be prosecuted in the criminal courts. It's something that is dealt with in the civil courts, in the High Court, Court of Appeal. But I think that's where HMRC have tried to do a really good job of saying, right, we've got these high-risk wealthy programs, you know, whereby we're trying to tackle the most serious and the most complex of crimes. Oh, sorry. Okay. And I think part of it is because we've got this separation and you've got HMRC trying to identify where is the big ticket money, that makes it trickier from a more practical perspective to try and prosecute and then enforce.
Okay, so this is very crucial. Oh, sorry, Rachel, go ahead, and then I will.
Sorry, I was just going to say, so obviously with the Harry Redknapp case and then some other cases as well, if you have people who are getting advice from professional advisors, that makes it very difficult, I think, to convince a jury. And you know, I agree with the people who spoke before. Juries, they do their own. Sometimes they do their own thing, and even if on paper you think it's a slam dunk case, you can't guarantee that a jury is not going to acquit somebody. And I've seen that there is an increasingly HMRC are more inclined to try and prosecute the accountants who give advice. So we've seen that when there was a number of TV presenters who were being investigated, and in fact their accountant was successfully prosecuted. And so perhaps I'm leading on to one of the later questions, but it's not just about getting the prosecutions, it's also about getting the right ones to act as a deterrent.
Yeah, makes sense. And the question I wanted to ask is beyond the script and is more about the relationship between civil and criminal law, which I think is paramount also for a project expert. So I really want to be sure we understand the different levels. So as far as I understand from your answers, but please correct me if I'm wrong, you are saying that there are the general criminal law offenses such as cheating and fraud, but these are rarely used in the kind of, I wouldn't say prosecution, in the response to tax offenses because of the broad regulatory powers of HMRC that end up, however, into civil litigation and not prosecution technically considering a criminal court. Is that the framework that you are depicting?
Yes, and that's how I see it. And I think Mike raised a very good point on the Redknapp case. And there used to be a problem in the criminal code. The legal test for dishonesty in criminal law, you had the Ghosh test, the objective and subjective. I think that was why Redknapp was acquitted, because the test is that the accused has to know. And as Rachel said, he was advised by professional advisors. So his defense was basically that he did not anything about money, and he did as he was told. And because the Ghosh test was subjective, the jury believed him. But in 2012, there was a case of Ivy and Genting's Casino that's now replaced it with an objective test. I think it would be interesting if, under that objective test, a jury will accept Redknapp's argument. So that's quite a very big improvement in the UK criminal law when it comes to dishonesty.
Thank you. That's an important point. Yeah, Dilbert.
There's another point that I was reminded of, which is there's not just the separation between criminal and civil, but also the standard of proof in both of the jurisdictions. So there's lots of nodding exactly. So in crime, it is the standard of beyond reasonable doubt, and that's a really high standard of proof to discharge. And the burden of proof there is on he who brings the claim. So it's on the prosecution there. And in the civil courts, it's on the balance of probability. So it's more likely than not, you probably tried to evade tax. And there, the burden of proof, depending on the specific crime, can sometimes shift to either the taxpayer discharging that burden of proof or the tax authority discharging that. And that certainly creates a complexity there.
Yeah, absolutely, Dilbert. I couldn't agree with you more in relation to the difference between the standards or the burden of proof that is required in either instance. I think I really wanted just to harp on a little bit about the new corporate criminal liability in relation to the Criminal Finances Act and what that does in terms of that failure to prevent model. And obviously, as an economic crime investigator and former prosecutor, having used the Bribery Act and seeing the impact of Section 7 and the failure to prevent model being used there first, I think that really has the possibility of changing the game in relation to not only who HMRC focus on, but I think being bolder and braver in relation to going after corporates, because Section 7, the failure to prevent tax evasion, both either domestically or internationally, is a strict liability offence. And it shifts to the corporate to be the one who then has to discharge that burden and demonstrate that they had adequate procedures in place in order to prevent that criminal offence from occurring, which makes it much easier, obviously, for HMRC to use that going forwards, as we have seen the SFO use successfully in a number of cases in relation to failure to prevent in relation to the Bribery Act. So I think for me, that is where we're going to hopefully see quite a lot of movement going forwards. And I think there's one of the leads for the corporate criminal offence said there's currently about 14 investigations, companies under investigation, with another 14 in the pipeline. So clearly it looks like they're going to really use this to the fullest advantage, because again, the burden of proof doesn't lie with them.
Thank you. That's very helpful. And to me, responds basically all the questions we have in this part. So before we move onwards, Project experts, do you have any questions?
Hello, thank you so much for your contributions. I really appreciate that. I have two questions to further clarify the discussion. I feel many references are to HMRC approach, and we speak about big complexity here, potentially large complexity in dealing with tax fraud cases. Is that complexity going beyond HMRC? In other words, we see many cases that involve, for example, bribery of foreign government officials would potentially be a tax offense and would potentially be money laundering offense. And you can see as well in UK some cases that are in US prosecuted under Foreign Corrupt Practices Act, and in UK prosecuted under anti-money laundering regulation. And money laundering regulation is used to or kind of ancillary orders are used to go against criminal finance. So my question here is, what's your view and experience, opinion, using non-tax fraud regulation and legislation in cases that feature tax frauds? Is this something we should look more in depth, using money laundering regulation in tax offenses? What is specific criminal tax law for? What kind of cases it should prosecute? It relates to my second question, where you speak about criminal law and burden of proof and juries that are difficulties juries face in prosecuting tax crimes. I imagine individuals sitting there and we are proving whether that particular individual commit a crime. It's one type of case, and perhaps I have some specific problems, but then I have failure to prevent facilitation of tax evasion. It's a third party that committed the crime and corporate failed to prevent it. So is there some kind of typology where certain types of liabilities would better fit certain types of tax fraud cases? Because obviously that individual sitting in front of jury is very different from some big corporate that is 10 years turning a blind eye on something. Thank you.
Can I just say, before answering your question, just to go back, when we're talking about the split between criminal and civil, I think probably just to follow on from what Lloydette was saying as well, that we should maybe just mention deferred prosecution agreements. And also, I think Dilpreet mentioned earlier the CDF, the Contractual Disclosure Facility. So in both of those, it's where the HMRC is saying, we believe that there is a criminal tax evasion, but we're going to deal with it on a kind of, well, for CDF, a civil basis, and the DPA, effectively a civil basis, in that there's no criminal prosecution as long as they do everything they need to do. And also because that just goes to the heart of the practical, point of HMRC is to get money back in for the Treasury, and a civil route is going to probably be much more successful at that than the criminal one. And then also so your point about the other offences, of course, tax evasion can kind of go hand in hand with money laundering. But in my experience, I think it comes down to how the information is shared, and this is anecdotal, but in my experience, it's more that there is another offence and then the information's passed to HMRC and it becomes a tax, rather than it going the other way around and HMRC sharing the information then leads to another type of fraud or bribery kind of investigation.
Yeah. I'll say there are two problems with the civil approach that doesn't help. The first one is that the civil approach, as what you just said, is to end as recovering tax from the taxpayer. So the enablers are completely out of the picture. And in most cases where the dishonesty lies with the enablers, they are out of the picture. So the taxpayer will simply say, I acted on advice. So the way to implicate and hold the enablers accountable in most cases is by criminal investigation. And then on burden of proof, the burden is much higher in criminal, but this is compensated by criminal investigation powers. So HMRC, if they start a criminal investigation, they can get an order to search premises and seize documents. In most cases, that's where the real evidence of fraud is discovered. Whereas in the civil procedure, you use this disclosure where the taxpayers decide what information to give you. And of course, they will use legal privilege to withhold the damning evidence. So the use of the tool approach, even if it's justified in terms of revenue recovery, hampers HMRC in getting the real evidence they would need to convince a jury.
Thank you. Thank you both. Anyone on the second question? No? Any other project experts with questions? Okay, good. Let's move on then to the next point. Now, what we're trying to understand with this question is the relationship between the different stages of anti-tax offences framework, so to say. So, prevention, investigation, enforcement, sanctions, remedies, recoveries. So we want to understand particularly whether there are other instruments than just criminal law to address these particular forms of evasion or criminality. The first point is there a positive legal duty for any public institution in your jurisdiction, so in the UK, to adopt non-restrictive measures? And that could be education, training, as Mike was mentioning, to prevent tax offences. If there is not, is there any other non-binding guidance that can compel or encourage public bodies to take these measures?
In HMRC, the Fraud Investigation Service, which is the team that deals with criminal and civil fraud investigations, they liaise with the communications team and the press team to run education campaigns. When they also collect intelligence on specific crimes. So based on that, they work with the communications team to raise awareness. They do that very well.
Thank you. Other points, Mike?
Yeah, I think it's quite interesting actually, because when we started introducing the Bribery Act and doing the training for law enforcement, we found there was like a hearts and minds issue as to get people understanding why bribery was so problematic and has so much impact. And I sense probably as a foundation element to this question is actually, is there any activity around for people to understand the harm of tax crime? Because if nobody's bought into it and we have a massive informal economy and, we recognise people all around us that aren't paying the tax that they should from all different stratas of society, I think regardless of how effective the legislation is, the investigation, the sanctions, prevention, disruption, all the activity you could overlay with the offending, unless people are bought into why this is such a harmful area of criminality and the impact of it, you're always going to struggle getting the uptake to actually do too much about it. So I'm not quite sure we've got the brought over the Hearts and Minds campaign as to why this is such a terrible area of offending. So I think regardless of all the measures we might talk about, you've got to get the psyche right within society and in our culture to say, this is unacceptable, and we'll all fight this area of criminality. But I don't sense that currently. I know in bribery we have to do quite a lot of work, and obviously there's quite a big narrative around the bribery issue to why people now fight against bribery and corruption, and we have as been mentioned, really effective Section 7 offence, prevention, and all the rest of it. But I don't think the same landscape exists at all for taxation criminality. I don't think we've mainstreamed it in any way. So as I said before, really, there's only part of the law enforcement landscape actually even thinking or doing anything about it. And I was just quickly looking at figures, even though we weren't supposed to delve into them. The latest ones was for 2019, and there was only 600 people convicted of tax-related criminality across the whole UK. So that probably shows really, regardless of the huge effort and the increasing effort through COVID, obviously, and the opportunity for fraud to be perpetrated. But yeah, I think, regardless of the relationship between sanctions and investigation, does society really consider it to be a crime? So I think you've got that fundamental issue with all of this. I think the other issue you have is there's danger in terminology, that, you know, talking about tax crime, you're talking about many different types of typology. You know, you sort of, from, you know, the hairdressing examples that were given right through to the top echelons of society. You know, so there's many different types as well. So it's quite difficult. It's a bit like fraud, isn't it? It's quite difficult to talk about the whole of fraud because, again, there's so many different types of it. And the same with tax crime, lots of typologies, lots of nuances, and some probably feels worse than others. Yeah.
Thank you, Mike. Very helpful. Fred, were you about to say something? Or
Yes, I was just going to say that. Sorry, did I jump in ahead of somebody else? Apologies.
No, go for it.
I was just going to say, I really agree with you, Mike, around the narrative. And absolutely, you're right. You know, I was at the SFO when the Bribery Act, a few years into the Bribery Act coming into force. And I think there's a similar narrative around tax evasion really being almost a victimless crime. And I think that was very much the narrative with the Bribery Act was, well, you know, who does this matter to? You know, this is the way that business is done. And I think that narrative has most certainly shifted, both internationally and domestically. And you have things like, for example, ESG, you know, that's definitely driving that narrative in the right direction. So I think part of the work that we have to do, or the sensitization, is really around what is the impact of, you know, tax loss to the country, to you, to me, and to, you know, to our children in school, to our NHS, and to a whole range of different services that rely on the receipts from paying taxes. Because I do think oftentimes people do think, well, got one over HMRC, well done you, rather than it being something that actually impacts our society in a really negative way and impacts on, you know, the government's ability to make change in the way that it wants to do so. So that narrative for me really needs to shift from it being, you know, victimless to actually there are real victims, and those victims are all of us, and those of us who pay tax.
Thank you, Lloydette.
So I agree with all of that, and I think that there's probably more appetite for within the public for corporate prosecutions. There's less sympathy for them, and obviously training is part of the reasonable preventative measures that come under the corporate offence. So the government's kind of pushing down the responsibility of the training onto the individual corporates, and their failure to do so could be a prosecution for them. And you know, I think it fits in, as we've said already, with the overall policy change in terms of, well, perhaps not a policy change, a tweak in terms of actually looking at corporates rather than individuals, but still looking at individuals too, of course.
I think there's 2 points actually as well.
Sorry, Mike. Sorry, I think Dilbert was trying to say something.
No, go ahead, Mike. I will finish this. Yep.
Sorry, apologise. Sorry. Yeah, no, I think actually it's slightly counterintuitive with the level of civil cases. You know, so I was just thinking in my own head. You know, if we were to do that in a lot of the fraud cases in general society, and actually sort of change code halfway through and go, actually, we'll do a civil case on the balance of probabilities and won't take you to the criminal court because we're only interested in getting the money back. So I think, again, that messaging is problematic. You know, so if the criminal cases are sort of tip of the iceberg, and HMRC is saying, well, actually, we can go down the civil route, you know, very successfully on the balance of probabilities to get the money back, that probably is counterintuitive, and probably gives a bit of a strange message out to those perpetrating tax criminality. So again, and also it's actually quite an easy route to take. So from a previous law enforcement perspective, if we had the opportunity to take criminals through the civil route, knowing from the balance of probabilities, actually that would have been highly attractive to us. But that route generally isn't open to other areas of law enforcement where it is HMRC. I think the other aspect which links into this question about effectiveness is tone at the top. You know, so whilst the tone at the top is so reported, you know, to be so poor, what chance do you ever have? You know, until the top actually demonstrate moral and ethical values across society, we'll always be finding it difficult to try and contend with this sort of area of criminality. And again, obviously going to adequate procedures under the Bribery Act, tone at the top, you know, drives all that good work. And I think as a society, we really are struggling, you know, from the constant reporting of the leaders of the country, the issues that are constantly reported, you know, so I think that's quite undermining, actually. So that's just 2 points. Sorry to interrupt.
No, not at all.
Apologies.
I think that, no, they're really useful. And in fact, the only small point I was going to say in terms of there's no sort of positive legal duty, but there are certainly these indirect duties that are created that everyone's touched on. And one that does come to mind, and the whole mandate of this organisation, the Office of Tax Simplification, partly to look at taxes and see how they can be simplified, but part of it is to educate, you know, the unintended tax evasion that has occurred by, you know, that takes place by, you know, the hairdresser, by whoever, and you know, the small fish effectively that HMRC say, well, it's not worth us chasing you in droves because actually we need to focus our energy on the faceless corporate wherein we can, you know, recoup hopefully some of the millions or billions for the exchequer. So I think that awareness raising certainly has been potentially helpful. And I think the point was mentioned earlier about HMRC's own guidance. The interesting thing about that guidance, though, it's a source of great contention because HMRC, I think, do try and do a very good job of putting forward their view of the legislation, but it is just that. It is nothing more than HMRC's interpretation. And very often, you know, we'll be in sort of just at the brink of trial or going into a hearing, and clients will say, and this is what I found on HMRC's website, and it's a real sort of battle to say, I know it's the guidance, but it is guidance, it's not actually law. I think that's, you know, very useful guidance, I would say, for the most part, but there's certainly some points of contention.
Marvelous. Thank you so much. We need to move on to the next question. I will bundle two sub-questions that are related. The first one is, what do you think about mechanisms in the UK that, if any, if there are any, because we know that in some jurisdictions there are no such mechanisms, that grant kind of leniency to tax debtors or to tax evaders? So amnesties, pardons, exemptions, reduction regimes. Can these regimes facilitate tax offences? And similarly, there is the related problem of the mechanism to repay tax debt. For instance, allowing tax debtors to repay back with assets instead of money, or allowing them to pay in installments. So these systems related to tax debt, do they facilitate in any way tax crimes or even corruption around the tax administration?
I'll start with the first one and then touch briefly on the second one. Yes, there's both. So there's the amnesty for crime, and then there's also the reduction for tax that is owed. So, and again, this is part of the policy of prioritizing revenue collection over law enforcement. So HMRC occasionally, when they've got evidence of fraud, they do what they call disclosure facilities. You might have heard of the Liechtenstein disclosure facilities. These are tax evaders. HMRC have found the evidence, but they've not invited them to come and disclose the tax they hid and to pay it. So that was the same approach they used on the Swiss tax case. Now, when the leaks from HSBC, HMRC had the documents, but there was no criminal investigation at all because HMRC assured signed a document under the UK-Swiss agreement that it will not be in the public interest for there to be any criminal investigation. And the difficulty with that was they now asked HSBC, because HSBC staff, employee, and customers no criminal investigation. But now it was now up to HMRC for HSBC to collect the tax and hand it over to HMRC. So the 5 billion they were expecting, they got about 3. And now there's something called the Diverted Profits Compliance Facility that started in 2019. This is where HMRC found evidence of fraud by multinational companies that used transfer pricing and other schemes to cheat HMRC. So again, no criminal investigation. They started this facility. You can't own up, pay the tax, all is forgiven. So the main issues here, because settlements are secret, no transparency, no accountability, plenty of scope for corruption. And also because there's no punishment, there's no deterrence. So if you knew that the worst that will happen is that you pay the tax anyway, it doesn't deter you from further criminal.
Thank you. Thank you, Zita. Very clear. Thanks. Anyone else? Let's move on then. Yep. Dilpreet, go for it.
Okay, one thing that that did crop across my desk recently that comes to mind here is the rollover reliefs. So the capital gains tax purposes, obviously, when you sell an asset, your liability at that point to pay the capital gains tax arises. So without going into the kind of the nitty gritty of the mechanics, a curious query that popped across my desk from two sources was, well, what can I do to delay paying the tax or simply avoid paying it entirely? Does council have any schemes? And I looked at my clerk and I remember trotting over and I said, is this a genuine inquiry? And she said, yeah, no, it absolutely is. And I spoke to the potential client and I said, look, we don't do schemes, we don't do that kind of thing. And they said, well, there must be something. So I said, well, you sold the asset, the gains crystallized. And he had said, well, there must be something. He said, what about the rollover relief? And it's a fair point, which is the rollover, the relief that sort of says, if you're going to go and invest in another business, etc., you can delay your liability to pay the tax, but effectively kicking that can down the road to a point where you hope that your liability dissipates, but requires some very clever and very, a lot of forward planning. I think those sorts of reliefs aren't always respected in the way that they're intended.
Thank you, Dilpreet. Any point concerning the possibility to pay in property, so in other assets than money?
I have heard of works of art, but I can't think of other property because actually this approach, because they have a bankruptcy and insolvency team. The approach is to make you bankrupt or insolvent and then recover it in that way. But they don't usually accept property. But I think there is a specific scheme relating to artwork where I think that, and again, that's for inheritance tax. So you can use artwork and things like that to pay or defer inheritance tax if you donate it or lend it to a museum.
Thank you, Zita, very helpful. Donato, I would just ask you to keep the question until the panel of the project experts so we can go on with the flow. Thank you. Yeah, suspicious activities, no problem. Suspicious activities report. So the reports that are filed, particularly by the tax administration to prosecution authorities when this is the case, when it happens that HMRC says there's something to prosecute here. How would you assess these reports? Are they complete? Do the materials they include, the contents of these reports, help the prosecution? Are they sufficient? Are there any gaps, any difficulties? Well, let's move on. Then I think you all mentioned something already about the main difficulties in your jurisdiction about enforcing tax law or pursuing tax evasion. We already have explored this in extent, but do you have any additional points apart from the difficulties between the civil and criminal regulation, problem of communication with the public, or the problem to convince the juries? Apart from all this, any other problems in the law enforcement of tax law?
Well, I think only just to go back to the point that it's not mainstreamed across law enforcement as an area of criminality for all to be investigating. So having been involved in fraud investigation for many years, it was never something that was at the forefront of our minds. It was never something we felt was particularly on our radar. and was always something over there dealt with by others. And of course, the conduit between law enforcement agencies is effective, and probably more effective now than ever before, but historically was always slightly problematic, that sharing data and information intelligence between agencies, and probably to a degree now, it is not what perhaps the public might expect it to be. So sharing intelligence databases, there are still separate databases, still separate investigative processes, and each agency works in a different way. So again, from the professionalisation project within government, the construction of HMRC, National Crime Agency, is quite different perhaps to the police forces. So again, historically, that will, that's why we've evolved in the way they've evolved. But perhaps, what one is more of a state, sort of an arm of the state, which is perhaps, those civil servant-based organisations, whereas policing is more, part of the community, perhaps. So I think that we have different approaches. So we have quite a fragmented law enforcement landscape, and each is sort of taking on the specialist area. So perhaps it's gone back to my previous point, really, that it is, seemed to be quite a specialist area over there, dealt with by somebody who deals with that type of thing. So it's not been mainstreamed, probably a little bit like the wider fraud issue. It's yet to be mainstreamed properly within policing, even though, you're more likely to be a victim of fraud than any other area of criminality. There's still policing focuses very much on physical areas and aspects of criminality, rather than the more sort of financial aspects of criminality. So I think that in that blend, there's a few issues around the difficulty of investigation.
Thank you, Mike. Very helpful. Rachel.
Because it's a victimless crime, sometimes there are difficulties in identifying where there have been offences that have occurred. And with the COVID relief schemes, we've seen a lot of whistleblowers, which is perhaps not usual. So one of the problems is identifying it in the first place. And as more corporates roll out their training, which includes their whistleblowing procedures internally, I wonder if that's something that maybe we'll see more of in the future. Not sure.
Thank you.
I agree with that. I think I agree with that, and I think the whistleblowing one is a really, really interesting one. That particularly where, say HMRC, for example, are involved. There's the issue around extra statutory concessions. So just to build on the point that Mike was making about the fragmented landscape. So it's an issue that even our judiciary has really struggled with. And I think it was in the case of VIRTEU where it said, we should be taxed, or want to be taxed by law and not untaxed by concession. People should have the right to ensure that they know exactly what's going on, and that whistleblowing is not sort of a conspiracy theory, that these are properly investigated, and whoever does is afforded that right and the ability, just as much as the right to pay your tax, that the right to say uncover something and bring that forward should also be something that's protected and honoured. And I think it's something that the system still is struggling with.
Excellent. Thank you very much. Rosita, I'm sorry, we need to move on because we're running a bit late. Eventually, we can keep additional points towards the end of the session. So, sanctions. How would you assess the effectiveness of penalties for tax offences in the UK? And by effectiveness, I mean, first of all, whether they are deterrent enough, and secondly, whether they are actually applied, implemented, inflicted by the relevant authorities.
Again, it goes back to what we've been saying. The law is very clear and strong. The maximum penalty for cheating the revenue, it's unlimited. It could be life imprisonment and unlimited fine. Under the Fraud Act, it tends to be 2 years. So the law, as written, is very good. The problem is the enforcement. I think they might mention the figures for convictions. I think what you find out that figure for conviction will be quite close to the figures for prosecution, because HMRC tend to have very good rates, success rates when they actually bring cases to court. The difficulty is that they don't bring enough cases. So while the law has all the tools to deter tax crime, the enforcement lets the law down. And just one point I wanted to make before on fragmentation is that the recent OECD reports on fighting tax crime, one of the criticisms they made of HMRC and UK is that several investigators in HMRC do not have a legal obligation to report fraud to the fraud team. There's no legal obligation, and this is one of the things that asked HMRC to improve. Just imagine that the civil team are not required by law to refer fraud to the fraud investigation service. So they see themselves, as Mike said, very differently from the fraud team, which are like the police. We are the tax collectors, we are the police.
Thank you, Osita. Very clear. Anyone else?
Just a really quick point to add to that. I agree. I think the law does provide that mechanism, but it goes back to the issue of the separation between what the criminal courts can do. So the magistrates can enforce a fine of up to £5,000 or 6 months in jail. Your Crown courts can give you maximum sentence or a fine of up to 20,000, something like this. But the civil courts, there is no, they can't enforce criminal penalties. And so you're really looking at financial penalties. And if you're going after big corporates, a number of them will anticipate this sort of thing. They will have the funds more often than not. And those who are that, I mean, and certainly for ultra high net worth individuals, usually have the ability to pay a very, very good advisor who's able to, you know, inform them of legal structures that they can then engage with that help them to sort of move money off. So I think part of it goes back to a systemic problem in the system.
Thank you.
Sorry, one of the things I was going to say that I think is a very good deterrent, or at least something that people really don't want to happen, is for their names to be published. So HMRC do this on occasion, even when they're investigating. And I've had situations where we have agreed that public announcement would be deferred for however long, 3 months or so, while we try to provide an explanation or settle it or deal with it. And that is something definitely that encourages people to speed up their involvement and their cooperation investigations.
Thank you, Rachel.
Just by way of interesting observation, actually, it's something I didn't know myself till I just had a quick look. The cheating the public revenue, the common law offence, actually is triable on indictment only, and the Sentencing Council is saying that ranges from 3 to 17 years in custody. So again, that legislation, as I said previously, is generally, I think, quite effective. It's actually obviously going to be quite limited and heading towards the upper end of criminality by not being able to heard in the magistrates' court and not giving an option below 3 years as a custody sentence. Whereas obviously the other offence, like the fraud offences and the like, can be used in the magistrates, obviously. But again, that's an interesting twist about the effectiveness of the legislation. Actually, it's quite limited because you can't use it for low-level sort of cases. So just
very interesting. Thank you very much. Moving on, systems of recoveries. Do you have any ideas about whether they're effective or not? How would you assess them? And also, are you aware of any additional system to remedy the consequence of the offense that is not necessarily recovery? Some of you mentioned about the crime being victimless, so to say. But are there any way to redress the harms caused by tax crimes other than recovery? Okay, moving on. Yeah. Oh, sorry, Rachel. Synchronies.
In a criminal case, obviously, there will be recovery, but there will also be potentially imprisonment. Whether or not that satisfies the public desire, mention that.
Yeah, just a quick point on recovery, and that's something HMRC started doing more recently. On the MTech VAT fraud, they go with prosecution, and when they secure a conviction, the missing trade are still missing, so they don't recover. So they've started using the civil law to sue any UK-related company that is involved in the fraud. So after whether or not there has been prosecution, they'll use the civil procedure just for recovery alone. That's something they only do with VAT. I don't think they do that with direct taxes.
Thank you, Sita. Thank you very much. Finally, connected to these, what are the remedies and whether they're different or not from tax crimes in cases of corruption, bribery, and other economic crimes? Are they the same for tax crimes, so imprisonment, compensation of damage in the case like this, or is there any other additional remedy? Okay, let's leave it there. I think Donato from the project experts has a question.
Yeah, thank you very much, Lorenzo Costa, for inviting me as a product researcher to this very interesting virtual workshop. I have just a question for our speakers in order to explore the interconnection between these topics and the recent legal evolution of the relationship, related to the relationship between the United Kingdom and the European Union to the Brexit. In particular, how is Brexit affecting cooperation in criminal and administrative matters between the UK and other EU countries? So based on your impression, what is the final impact of the Brexit on the 6 types of action explored by our colleagues of the VIRTEU project and mentioned by Lorenzo, namely effective detection, investigation, prosecution, and asset recovery related to tax crime? Thank you very much.
Anyone on the impact of Brexit on cooperation? Tough one, Donato. What a difficult question, huh? Okay, no. Okay, moving. Yeah.
I think in terms of Brexit, and obviously they're still negotiating some of these, but the UK is still very much, a member of the OECD. It still has expressed a keen interest to keep its double tax treaties and in place, and to have, and it will negotiate now separate ones with individual European member states. It will also continue to abide by the MLI. And I think those certain standards and the fact that HMRC want to be able to cooperate with other revenue authorities, not least for its own benefit, I think are great drivers and incentives on an international level. That I don't think, I think the one thing is probably that automatic exchange of information might not be readily available, but I think that in negotiating some of these treaties, I think they're going to try and get that in. I'd be very surprised if they let that one slip. I think it's too important for HMRC to let that one go past their treaty negotiators.
Excellent. Thank you, Dilpreet. Any other?
Yeah, I was just going to follow on what Dilpreet said in relation to what the future holds. Whilst I think it's all still rather vague, I think HMRC's focus also really is on what can it do on the international stage, because I think that the British government does straddle a difficult line between, number one, wanting to attract companies to come and invest in the UK and find it a good environment in which to trade and to build their companies, versus it being a jurisdiction that is very, very tough on tax evasion and bribery and corruption and a whole host of other things that potentially for some organizations could be a deterrent. And I think it's trying to find out where it sits and where it is, where does it want to be on the world stage. We know, for example, that, that London is known, and I think it's not disputed as, one of the money laundering capitals of the world. And so as we navigate, I think, find our way through Brexit, I think these are some of the things that, HMRC and a number of other government departments are going to be struggling with. But I think also I wanted just to mention the J5. So that's the Joint Task Force. And again, that's very much with HMRC's global hat on. And the J5 is focused on a global corporation task force, including the US, Canada, the Netherlands, and Australia, which focuses on how do these states together tackle the issue of tax crime. And we've seen a number of operations that they have done together. So, I think HMRC's focus is in a number of different directions, looking at the EU, but also looking globally at its impact. And I think the J5 is one of the ways in which I think it intends to make quite a lot of impacts going forwards.
Marvelous, thank you. We need to move on to the final question, which is actually a bit more immediate than the others. The final question focuses on vulnerabilities and particular sectors. So I would kindly ask you to name the 3 most vulnerable sectors of the economy to tax crimes and corruption in general. So construction, communication, education, financial sector, you had the list in the document with the questions. And after telling me which are the 3 sectors that are most exposed to tax crimes and corruption, I would kindly ask you to tell me why. So what are the vulnerabilities affecting these sectors? And if you have any examples of real cases, please do provide them, because that would be helpful.
Can I do just one? Okay, so I would go with the financial sector. So the financial services industry is the engine of tax fraud in the UK. So if you're looking at evasion, obviously the private banking industry is where it all happens. So you have professional enablers whose sole duty is to help wealthy individuals to avoid tax. That's well known. It's a big part of the UK financial services industry. And then on tax avoidance, what is less commonly known is that every complex schemes, the mass marketed schemes, involve banks, because you need to create fictitious transactions to generate fictitious losses and expenses. So you always have a bank. So the same banks that enable tax evasion also enable the most serious tax avoidance schemes. And also, just to conclude on the COMEX tax fraud in Germany, it's not a surprise that the first 2 individuals that were prosecuted and convicted in Germany were London bankers.
Excellent. Thank you, Sita. Financial sector then. Other ideas for other sectors?
I would agree with the financial sector. I'd also say the real estate sector, particularly in terms of how properties, funds can be held. The fact that in the UK, you can have these very extensive cross-border, including offshore jurisdiction sectors. I think also the technological and e-commerce sector, that's one that we're really, really trying to grapple with and understand, where does the liability to tax arise and who has the right to tax, but then conversely, not being overzealous in the taxation, so not having double taxation. And that's where I think it's become an area that is quite vulnerable to tax crime.
Thank you, marvelous. Anyone else?
I would probably say agree with all those that have been suggested so far, but I'd probably also go with the hospitality and leisure sector, and thinking specifically about HMRC's current investigation into JVC. And I think that the reason why that's an interesting investigation and one to watch is, first of all, it's about a company that is now listed on the London Stock Exchange and is seen as being, a good company, but in essence, it's past and has appeared to have caught up with it. And the issues there, I think, around when you operate in markets, in grey markets. So, for example, one of the issues in JVC is the fact that it was operated in Turkey and appeared to have been operating in a market where, first of all, gambling wasn't allowed, but it was circumventing those rules via using a Maltese entity. So I think that the hospitality sector, especially gambling, is going to be one that might be still vulnerable to some of these issues. But what is also interesting about JVC is that the HMRC indicated to the company that JVC was also under investigation for a Section 7 Bribery Act, failure to prevent bribery, which is, again, a lot of my clients are on the phone to me, the analysts at financial organizations, going, what is this? Because it's the first time that HMRC has tiptoed into that part of the world. So it's an interesting one to watch. It's different from what HMRC ordinarily investigates, and it's the first time that they're going to be using the Bribery Act potentially. So I would say for that reason, it's an interesting area to watch.
Fabulous. That's a really great case law that we really need to look into this. Thank you very much. We don't have any more time for answers. Final questions on this point of vulnerabilities from project experts, if any. None? Okay, good. Thank you very much. We are 7 minutes late, but overall that was extremely, extremely successful. Thank you all. Costa, I think we have 5 minutes break, right?
Yes, we should have 10, but we are running late. So if you agree, we will have just 5, and then we will give the project experts 5 minutes at the beginning before starting with the question to comment on the first part, and with 30-second question answer time. So very quick, concise, the things that you would like to add. So I pause the registration now.